Hello and welcome to another update video about Bitcoin. The price has come down a little bit today. We had a bit of downside pressure as already explained in the last few videos. We did rally yesterday into resistance, so quite naturally today on Saturday, it's weekend, it's normally sideways Saturday, typically see some sideways action. To be honest, we saw the price drop a little bit today, but generally boring sideways action. Nothing too exciting, and because price rallied into resistance yesterday of our triangle, we're going to take a look at that in a minute. It was anticipated to see a bit of downside today. I said that in my video earlier today that we expect some downside pressure here and possibly price reacting here with a bit of a bounce to the downside due to price rallying into resistance and the likelihood of price breaking out of a range on a Saturday when when volume is low is quite rare. So we're going to take a look first at the 4-hour chart, take a look at the different bullish scenarios that are possible, take a look at the invalidation points, and then we can also take a look at the lower time frame. But before we dive deeper into the analysis, first a few words about the sponsor of today's Bitcoin video, Chartprime. Chartprime is a service that provides specific TradingView indicators. There are 5 specific and unique indicators that you can only get through Chartprime if you sign up to one of their plans. These are based on quite complex algorithms and formulas and can be helpful in identifying trade setups, which means they can provide additional signals that could support your trading. Indicators can, for example, also be useful to support Elliott Wave counts to give more confidence. Of course, you don't need to apply Elliott Wave to use Chartprime, and the combination of their indicators alone can provide trade setups and signals as well. They currently offer a 30% limited time discount, so if you are interested in this, check it out. Of course, bear in mind that no indicator works 100% of the time. Here's an example of the Bitcoin chart with one of the range indicators. This indicator combines various indicators in itself, so you can adjust it to your needs, but it basically shows your range resistances, different support resistance levels based on different time frames, and it categorizes them based on their relevance. And this indicator provides you with dynamic support and resistance bands to which the price is reacting. And if you're interested in checking it out, make sure that you use the link in the video description and on their website. You can also read through testimonials and you can join their Discord community, which you can join in case you have any questions about how to use those indicators. So let's start here on the 4-hour time frame. We can currently see price action since the June lows. Current expectation is that we are not going to see new lows below the November low. That's at least what I'm leaning to at the moment. But as I said as well, I think this is not going to be an easy one to the upside. I think it's going to be a rocky road. I think it's going to be very difficult, very choppy price action, very sloppy. It's not a crystal clear move to the upside, rally to the upside. And I can't even guarantee you that the bear market low is in. I'm leaning towards it as long as we are holding the relevant bullish support levels. Elliott Wave is one of the best methods to understand when scenarios are changing. So at the moment we have enough evidence to say that there is at least a good evidence or a good chance, good probability that the bear market low is in. And Elliott Wave, and one of the strengths of Elliott Wave is that it provides us with very clear invalidation points for this scenario, and also with very clear and objective price levels that we can use if price breaks below these levels to focus more on the bearish count, because if price breaks below certain levels, then the probabilities for new bear market lows will increase again. So it's a dynamic environment. Markets are always in flow, and what I'm telling you today could already be different next week if certain levels are broken. We are in a very, very difficult situation at the moment. Bear in mind that we have come down from an all-time high in this current bear market if it is still a bear market or not, we will see. But we've come down and we're now in a possible trend change of this overall downtrend into an uptrend. And trend changes are always, everybody knows that, are always the most fragile situations in a chart. So this can easily break down. We make higher highs, we make higher lows, we have impulsive price action to the upside. This can also be counted as a diagonal. Absolutely, there are different ways. I can't show you all options. It's just, time doesn't allow for it. But this move up can also be a diagonal, which means if it is a diagonal, then it's not going to be an easy game to win here. It's going to be a rocky road. Now, at the moment, I'm counting the bear market low as in, and of this November low, we've been looking at a wave 1 to the upside here, which peaked in February, a wave 2 to the downside, and now a third wave up. And in the third wave, I'm counting the move up here as a wave 1. We are now in a wave 2 and would then, in the next step, rally in a third wave of a third wave. This is only one of the bullish options. There are a few other ones. I still prefer this one, but this scenario also has some weaknesses. In this video, I thought I'll show you what the problem is with this count, because I also always try to provide some education, more crypto online. The benefit and the value of this channel and MCO is not purely the Elliott Wave analysis. We always try to educate as well and also give our views about trading. But here, from an analysis point of view, from an educational point of view, to understand this as a wave 1 is absolutely possible. It's a pretty clean impulse. The weakness of this wave count is that the wave 5 was quite anemic. It was quite short. Bitcoin likes to see extended waves in the fifth wave. That didn't happen. I think wave 1 was pretty much the same length as wave 5. That is, as per original and traditional Elliott Wave method or analysis, absolutely valid, and it is also, it is valid. It's just that Bitcoin likes to do extended fifth wave, so it was quite anemic. But it's still a valid count. But this is the weakness of this first 5-wave move. Gives the alternative possibility that we had something like that this was actually the 4 and this was the 5. Then we have an extended fifth wave. That's absolutely possible. In this particular scenario, price could come down a little bit deeper than the yellow area. So in this scenario that I'm currently following still primarily, the 22K level is really the level below which I will probably have to change the view to the other scenario, because it just allows for a lower price drop. And that is at 17.5K. That means we have two bullish scenarios we can follow here primarily. Either this one or this one, where the wave 1 is just a bit extended to the upside, and we're basically now in a wave 2. It's just that we are not yet in the wave 1 of the wave 3. Or, well, actually that would be complete already, that we're not yet in the wave 2 of the wave 3, but that we are still in the main wave 2. And that price can then drop a little bit lower. So we've got two bullish scenarios to follow, and they're both likely. It's just that in one of them, price can come down a little bit lower. And then we've got, all sorts of exotic counts that could play out here. For example, even in a leading, if I look at this as a leading diagonal, all of this, then the move up here could have been just an A wave. This was then a B wave, for example. That's possible. And this is then again an A, B, C. So this would then be, let me think, with A, that's one possibility. A, B, but then we would get a C wave to the upside. That's possible. So there are all sorts of other counts that are possible, but they would not necessarily change our support levels. I hope that makes sense. That's why I don't show you all the different counts that are possible or likely here. Try to keep it simple, not to confuse people too much. Okay, very, very important. But this is sort of the bullish case, and the bearish case would, which is still possible, would be based on the idea that what we did here in June was a wave 3 low. We moved up in a wave W. We moved down in an X wave, basically an overshooting X wave to the downside. We're now moving up in a Y wave that could be finished. And then we have here an A, B, C. And we could now head to new bear market lows. That's of course possible. That's why we cannot rule out new bear market lows. Yeah. So at present, even though I'm leaning towards the idea that the bear market low is already in, I would also not be surprised if it still breaks the November low. And that simply has to do with the current quite fragile situation. The idea that the move up could be a diagonal. Diagonals are always less reliable. The idea that we still have a possibility for a WXY move to the upside. Yeah, not an unlikely scenario. It's just not the primary. And yeah, in trend change situations, the count and the structure is always very, very fragile. So hopefully, that at least gives you a good idea of where we're standing, and relevant support for the imminent bullish setup is at 22K. Yeah, it's this yellow box, but the 22K level, if we break and sustain below it, I cannot really go with this main scenario I'm currently following. There's, by the way, one more weakness of the main count here, that we have a 1-2 setup. But again, there's a bit of a lack of good alternatives, okay, in terms of counts. So I'm going primarily with this one. But one weakness is that the yellow wave 1 here basically reached the 1-to-1 or even above the 1-to-1 ratio of the larger wave 1. That normally is a case or an indication that it could be something different, okay? Because normally you don't want a sub wave 1 exceed the 78.6 extension, but it did, okay? So again, that's just a very academic side of it, and but relevant for practical application. It's just for everybody who wants to know a little bit more and get an additional edge in Elliott Wave. Now let's look at the lower degree time frame. I'm still primarily following the idea that we are in a wave 2. The idea here is that we come down in this wave 2 in an ABC correction, ABC, and the B wave could be a triangle. That's sort of what the idea I primarily follow. Or the B wave could be a larger B wave, a higher B wave. They are both possible. But at the moment, because we are so far holding triangle resistance, I primarily focus on the idea that this is that the B wave is unfolding as a triangle. But it's nothing new. We've been talking about that for more than a week now, and so far it has guided as well. The triangle is not invalidated or anything. It reacted very nicely to the trend line again, highlighted that earlier today, and then we have come down since then. And also any reaction to the upside is not bullish enough yet to indicate that a overall low has been made. Two possibilities now here. As long as we stay below 30,050, we have two possibilities here that I might mainly focus on. Because above 30,050, the triangle will get invalidated. Would it be bullish? No, not necessarily at least. It would simply indicate that this B wave goes a little bit higher. Okay, but at the moment I primarily focus on the idea that the B wave is unfolding as this triangle. Within the triangle then, two options. So either we break down straight away, because we have, in this C wave by the way, because we have a triangle count complete, A, B, C, D, E. What can happen, and I highlighted that in the last few videos, that this triangle, until we really get a breakout, and the breakout here into the expected direction would be down below 27,210. As long as we don't break below that level, the triangle can always extend in a horizontal fashion. So what could be the case is that the E wave is actually sitting here. The D wave is not finished yet. The top here was actually the C wave, and the low of the 1st of May was actually the B wave. So that we get a bit more of a complex triangle, a bit more of an extended triangle. Absolutely possible. You can see how easy it is for a triangle just to extend out. And then there is not much more to add. I mean, a few things maybe. So obviously we could get a higher B wave, but what is quite interesting, if you just look at the price structurally, you can see that downside has been quite impulsive recently, whereas upside here is very, very choppy, sloppy, slow, corrective. Indicates that on the short side, there is a lot of momentum here as well. Yeah, quite strong move down. The upside, the bulls are struggling. Yeah, therefore I think it is more likely that we indeed are in the triangle in which we should not break above 30,050. Now Bitcoin can always surprise, and if we break above 30,050, the imminent triangle count is invalidated, but the overall assumption that this is a B wave is not. And we will then have key resistance at 31k. And now I think that above 31k, we have probabilities shift towards a direct breakout, but I need to see 5 waves, and I currently don't see any impulsive price action to the upside. Okay, that's my update about Bitcoin. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.